It was amazing finish of a week. Those hopes of this bull market to that time span of a year has been reignited, and right now the questions are whether this type of a very optimistic moods are about to persist for longer, and will Apple deliver as this the one and the most important stock that is pushing those indexes forward. My name is Rafał Leszek. I'm very glad you decided to pop in and watch another episode of Blockrevision. Let's get to first blocks of Blockrevision today. As a reminder, we are live, so if you have any questions right now, you can pose it. So we are starting with economy view right after market outlook. Then we are jumping to most important economic events as well as earnings events. And at the end, we will have a trade idea. So especially for you right now. Let's head on to first one thing, fastest impulse about to end. So as a sum up, changing effective federal funds rate has just looked at that angle of a acceleration to the upside. 5 percentage points has been achieved within less than 13 months. So that was unbelievable when looking back right now. However, the many of analysts are expecting that right after hitting this level, we will have a dramatic slide downward. But right now, the market is kind of a dwindling around this and that option. And right now, even though the consensus of a market is betting that there will be looming credit crunch that will be driven by a combined impact of Fed tightening and bank failures, and also this debt ceiling deadlock that right now coming to a head right now. The partisan standoff threatens a period of intense financial stress, and even this climate wildcard from oncoming El Nino that may also bring over this disrupt commodity aspect of the issue. Will that factors eventually spoil the Fed's part and push the Fed to drastically lower down those interest rates? That's the most important question of right now. However, I do expect that the market is wrong on terms that we might be lowering the rates right now. There will be a relief rally related that there won't be cuts. As normally, the cuts for the market was something that was correlated with somewhat a turmoil on the markets and in the economy. That's why this pause in hiking rates and this pause into this hike and cutting period will be important positive factor for the markets. So those trifecta of this problems with debt ceiling, with banking turmoil, and even the climate may be the one that may stop the economy robustness for a while. But there might be also something even bigger around the corner with this lower liquidity times. We don't know what type of black swans are swimming out there in the ponds. That's why we need to have our seatbelts fastened on and just be careful that something may turn up as a wild card. This week also there is a CPI coming at 12-month percent change recently for all items has been at 6.0% level, with major categories of food right now is being significantly higher, whereas energy slumping. But this week's data out of CPI may bring over much more relating this, where this Fed's policy may eventually go. I don't know that there are much controversies around CPI. There is also something, as I would say, that some factors are leading to overestimation of inflation inside of CPI. Also, this basket of goods hasn't been prepared in a quite of a reasonable way that may bring a point of contention, but there is still one of the most important factor for market to assess where we are right now in this cycle of inflation, whether it's lowering down or rising. That's why I wouldn't really stick to those percentage points, but rather to the tendencies, whether there's a much backwardation or rather some of the pivotal points that may even spook the sentiment for the markets. That's why we need to watch this data this week on Wednesday. All right, so market outlook. Market outlook is the one thing that we always looking at, the most important indexes. So let's head on to SPY. So right now on SPY we have nothing very positive, but nothing really concerning. We have really tend to a sideways moves, and right now with setting up the bottom for this consolidation at 400 levels. I do expect that it's a matter of time we'll eventually cross that 416 barrier, but we do need some of a catalyst. This catalyst might be the CPI gauge. In terms of QQQ, we are right now much more positive. After this Apple's earnings, we are right now forming a type of a wave. Sorry, the flag that may push the valuation forward, especially with this this much more extended flag being formed, and right now this break out of the consolidation pattern might be something of a harbinging that we may attack 330s this month or the next, as the period between May and June is very often finished with some of the largest spike that may bring this inflection moments for the market, and that may even happen in this time as well. So right now, let's back to the presentation. Banks show increasing strains as capital dries up. So that's the analogy to 2008, where we had S&P 500 financial sector GICS, iShares Preferred Income Securities ETF, and those both are showing some type of a liquidity drying up. We don't have much of a strength to rebound out of the area, and that may even bring some concern whether we have a power, whether there is a investors believe in those type of assets. So smart money don't buy the stocks where there is a high probability of recession. Right now, we still have a recession consensus among economists, but that may be overestimated. That's why also we do expect that there might be turmoil, that might be a slide, but normally when the sentiment is still very low, I wouldn't expect that recession may come over this quarter. I even expect somewhat there might be high percentage of probability to have this recession, but right after elections in 2024. So it's still some way ahead. Right now, let's head on to crypto outlook and look at what happened on the Bitcoin's network. So NFT mania has hit Bitcoin. NFTs are those non-fungible tokens that the internet, the Twitter, the Reddit was crazy about, having this a chunk of a this digital and not unique and kind of a prestigious JPEG on inscribed on blockchain, given the chance to trade at the literally at the cards, or however you'd say like digital stickers, and exchange with other users for money. And this time Bitcoin's developers have implemented, that was back in the beginning of this year, this implementation of NFTs, this non-fungible tokens, so-called ordinals on Bitcoin. But right now the craziness around this topic is getting that level that the whole Bitcoin structure has clogged. And to just look at the data ordinals inscriptions just skyrocketed on Bitcoin, and that's a mania related that on Bitcoin there is something of being much more useful to some groups of people than just a type of a commodity or digital type of money. That's why it's given us the type of interest around. But it's very important for Bitcoin to also speed up and also find the solution for the heightened interest of investors or collectors, as otherwise this massive adoption won't eventually come. Let me know in the comments section below or in the chat what you think about it, whether there's a eventuality that Bitcoin will eventually discourage those users from using NFTs, or rather Bitcoin's developers will find a solution. I'm very interesting of what you might have in mind. Market movers. So in terms of market movers, let's head on to what's been riding the markets past week. So it was United States non-farm payrolls. We have jumped through surprisingly through 200s. So the US economy unexpectedly added that amount of jobs, and there were spikes in business services, healthcare, namely ambulatory services, and more or less that's a very positive, as if we just have a increase in business, that means that there is an expand and seeking professional workers, whereas inside of a leisure and hospitality that was also gaining, we can find that there is mainly positive moods around consumers, where food services and drinking places are really gaining on meaning, and financial activities among those that are rising, even those related with banking, insurance, investments, and so on and so forth, means that right now we are rebounding out of this banking turmoil. And so the projection is still quite shaky, but it may also bring some surprise to the upside. So Apple leading stocks. Apple reported second fiscal quarter earnings on Thursday that beat Wall Street's soft expectations, driven by stronger than anticipated iPhones sales, and that's exactly why we've seen that rise on US 100, and we can find that it may also spark a better hopes for macroeconomic outlook that recently also suffered. So the company has been also a victim of this global turmoil back in 2022, but right now this deglobalization shouldn't be as much of a threat to Apple, and possibly they may shift their policy rather to India than to China, as this post-China world right now looks like been something quite serious. So last week's reports has brought AMC, Warner Bros. Discovery as the winners in terms of earnings, and that brings also some of an outlook that this consumer confidence and spending within entertainment sector is right now recovering. This week we have PayPal, Palantir, Airbnb, Rivian, Roblox, Unity, Fiverr, Krispy Kreme, and Spectrum NYC. So not very loud names, but for those that are trading on small and medium or even large type of stocks, that might be interesting. Right now, let's head on to quickly earnings calendar, and have I changed? So it was the earnings calendar, last week's reports, and data from Apple. If you haven't just watched, right now let's head on to economic calendar, and this week, what we have important this week. So since Monday we have consumer confidence index from Australia. Right after, on Tuesday, Fed Williams' speech, and on Wednesday, inflation rate out of US. Inflation rate also comes up out of China. Bank of England interest rate decision, and PPI on Thursday out of US, and GDP from UK. So those are the most important events to watch. Right now, let's get back to trade idea, to our presentation, and right after I have for you interesting chart of XAG USD. It's still the same as I have mentioned of yesterday, as there is a chance that we'll revert from that area. So I do expect that XAG USD would have a possible rally downward, as it is quite possible we'll eventually reject that level of 26.16. Also on gold, we have hit the all-time highs and have rejected, and this exactly supply type of reaction of the market when we have really discarded over half of a previous day candle, as well as this double top formation may push us still lower to 24.18. So if it materializes, I would expect that we will just cross this 25.52 levels from the level where we are right now. So for the confirmation, just wait for the close on the hourly interval, this 25.5. If we manage to cross it, that would mean that there might be a clear path lower to 24.63. For now, however, we still do expect for confirmation, and in terms of possible short position, I would make it right now as it looks like that, with risk reward ratio at 2. So it's not very positive, as I do find the most lucrative trade propositions with risk reward ratio from 3 to 4. But you may just hang on for the right moment, and even enter the position if it gets closer to this previous highs. So that's the possible area of slide that the XAG should stop at. Otherwise, if we just have a further rally upside beyond this high, I would find that this trade position should be discarded, and we will wait for another type of proposition. Tomorrow there will be possibly also an update related to XAG USD or any other interesting type of trade to speak. So thank you very much for today. Tomorrow at 8:45 a.m. each time we will be there. So if you have any questions, just put underneath and I will get back to them as soon as possible. Then bye.